What's up, everyone? It's Scotty with MoneyVest. So markets here pushing higher on the day with the NASDAQ, S&P, and the Dow all rallying a little bit over 30-40 basis points on the back of a very strong jobs numbers that came out. I broke that number down earlier today. As always, if you enjoyed this video and find it helpful, make sure that you drop a like and don't forget to subscribe to the channel. I would really appreciate that, and link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos, including trade alerts, Discord alerts, everything. You'll find out exactly what I'm buying, selling, everything's going to be included, as well as the intrinsic value spreadsheet where you can track all the stocks that are on my watch list and which stocks have what fair values, including S&P 500 valuations, volatility spreadsheets, and of course our members only private videos as well. Everything is going to be included with the link down below. And the first week of the month is usually the best time to join. Also, do check out the courses: fundamental analysis, technical analysis, options trading, and psychology. Lifetime access with over 130 plus videos and over 30 to 40 hours of content. And this is constantly getting updated with new information. And also do connect with me on Instagram. My handle is going to be CASWRP. Would love to have you on board over there as well. And I'm going to start maybe like a broadcast channel over there for anyone who might be interested for constant updates and behind the scenes stuff as well on Instagram. So link's going to be down below for all of that. Again, we'd love to have you on board. So 4 things that could cause stocks to plunge. This right here came out earlier today. I want to break this down in a separate video in more detail, but let's just take a quick look on the overall markets. S&P 500 here pushing up over 41 basis points, up over 4,600 on the day. So very nice move to the upside. In fact, today was its 52-week high for the S&P 500, and NASDAQ here also rallying over 45 basis points, with the Dow Jones pushing up a little bit over 36 basis points as well. The next Fed meeting is going to be in 4 days. So next week we've got the next Fed meeting. And this right here, of course, was the unemployment numbers. A 3.7% is the new revised unemployment rate, which has obviously come down from 3.9. Non-farm payrolls, month over month, we added close to 199,000 jobs. And private payrolls, we added about 150,000, with manufacturing payrolls 28,000 as well. Participation rate slightly ticking higher to 62.8%, with average hourly earnings at 0.4%. And of course, year over year sitting at just about 4% as well. So we have seen unemployment rate really low, continues to be a very resilient economy, and 3.7% is indeed very strong jobs numbers from the market, from the economy, and 6.3 million unemployed persons, which obviously, if you take a look at this ratio, which we calculated in one of our previous videos, 8.73 is the JOLTS numbers, 6.29 is the unemployed persons, and the ratio now is sitting at just under 1.4. This number has come down from 2.5, but it's still not high enough for the Federal Reserve to believe that the economy is strong, that the jobs market is resilient, but it's also not low enough for the Federal Reserve to start aggressively cutting interest rates. That's why the market's basically pushed back a little bit of that forecast for when the rate cuts will begin. Earlier it was in March, and now the market's pricing in May of 2024. So you'll notice that May 2024 is when the first rate cuts expected to take place, and the market's pricing in 5 rate cuts going into 2024. Now, this right here is basically an article that goes over some of the reasons as to why the markets could come down. Volatility is one measure, valuation is another, interest rates are another, higher for longer. So a lot of these things that we have already talked about, there's no, like, this headline doesn't necessarily create a lot of FUD, but just something that we need to be aware of, that there are certain things that, yes, are suggesting that the risk reward is not that great. But of course, the market can continue to power through all this sort of negativity or fear or uncertainty or doubt, and continues to push higher on the back of some very significant optimism. The sentiment's very strong. December seasonality is kicking in. Yes, the market's overbought, but we are certainly seeing the market hitting a new 52-week high, intraday high for the year. Hit in late July, which was just under 4,600. Index is currently up 19% for the year at 4,607. So it's been absolutely a fantastic year for the market. And of course, Tom Lee from Strats saying that liquidity rally will rocket S&P 500 to a record high as well. Stocks are in the middle of a liquidity rally, according to Fundstrat's Tom Lee. The S&P 500 will rocket to a new high 5,200 in 2024, and the Fed is no longer fighting an inflation war, but really shifting towards managing the business cycle as well, is what he's saying. And Lee, who has been one of the most persistently bullish forecasters on Wall Street this year, predicted the S&P could end up soaring to a record of 5,200 by the end of 2024, implying a 13% upside from the index's current levels as well. So it really, it really pays to be bullish almost always, and it really sucks to be bearish almost always, which is exactly why I think it's important to not fix yourself to a predetermined stance, and really just take it day by day, look at the present circumstances, look at where we are in that pendulum swinging, whether we're overbought, oversold, overvalued, undervalued, where are the deals, what's the risk reward. I think that's a much better approach than of course being bullish almost always or bearish almost always. There's nothing wrong with that. It's just a different type of investing strategy. And I'd much rather understand the risk reward. And of course, Tom Lee's been very successful and very much on point with his analysis. But you also have to understand that in 2022, there was a lot of forecasts that Tom Lee said, oh, we're going to bounce back higher, we're going to go back higher, we're going to rally, this is the time to buy. And the markets were absolutely getting crushed left and right, getting knocked around down over 20-30% in a bear market. So it doesn't work always. Just because markets see more bullish years than bearish years, of course, people who are extremely bullish are going to end up looking right most of the times versus people who are not bullish. Or in other words, let's take a look at Peter Lynch, right? Peter Lynch, for the most part, is bearish on the market and very much bullish on gold, bearish on the overall economy as well. So obviously he is going to be more wrong than right because markets in general are pushing higher. They tend to increase and go up. So this right here is what the heat map looks like. So Nvidia, Broadcom, Microsoft, Apple, Amazon, Tesla, Meta, everything pushing higher with energy and financials also moving up. Google slightly down a little bit over 1.3%. So again, it was a pretty broad-based rally, I would say. Lots of participation, energy recovering a little bit. So over the last one day, again, energy leading. We got technology, financial, industrial materials, everything pushing up. In the last 1 week, we got comm services, technology, consumer cyclicals, financials, all of them pushing higher. And over the last 1 month, we did also have almost all sectors pushing up, with energy was the only one that was slightly down. I did close out my position on TMF. So if you come over to the yields, we have seen a very nice bounce back higher, up almost 2%. TMF, for that very reason, was down a little bit over 2.6%. I ended up kind of closing out my position, and we'll be adding more maybe if yields continue to move higher here, and we do see some more momentum to the upside for yields and downside for the bond market as well, considering how overbought we really are. So I will be looking at re-entering this position, but I was able to lock in close to 20-25% profit. Happy with that, with a good bond trade macro tactical play. We'll continue to revisit and re-enter this when the opportunity presents itself again. Now going over, and again, link's going to be down below if you want to get access to exactly find out what I'm buying and selling and get access to trade ideas and all the Excel spreadsheets and members only private videos as well. Silver prices dropping, wheat, cotton, we got natural gas, soybean, everything pulling back with the crude oil. We got cocoa, live cattle, sugar, lean hogs, heating oil, gasoline, everything pushing up, with Bitcoins a little bit over 44,000 and Ether just over 2,300 as well. So Bitcoin continues to be very strong. Mara was up 8% today. We got Riot up a little bit over 6%. GBTC, Grayscale Bitcoin Trust up a little bit over 4.7%. CleanSpark was up almost 12%, and Coinbase pushing up a little bit over 7.6% as well, with Bitcoin over 44,000, continues to charge through, and the next resistance and target, as we already know, is going to be at $48,000 to $51,000. And for Ether, that's going to be sitting roughly at around 3,500. So we're coming up to that resistance. We're starting to break out a little bit, and that next target and resistance is going to be at 3,500 for Ether. Crude oil prices getting a little bit of a rebound, so not a surprise considering how much selling pressure we've seen for crude. And it is within the context of this downtrend, I would say, so lower highs and lower lows. And of course, right now we're coming up to that resistance over here for crude, and that's going to be that next resistance level to watch. It's at roughly $73, $74 a barrel for crude oil. Now, going over to the market, so S&P 500 first, and we have already talked about the idea of just being maybe a little bit on the overbought side, unfavorable risk reward. But just because the market's overbought doesn't mean it's going to come down. The markets can remain irrational longer than we can remain solvent. So that's especially true on the way up, because right now you'll notice the markets continue to move higher, right? So it's basically drifting up. It's not really seeing a lot of momentum, but it's definitely drifting higher on the back of an overbought RSI. So it's very, very normal for us to see these types of environments. And if we do end up rallying above 4,600, maybe a few more weeks because of that December seasonality, the next target is going to be 4,800. So this is what we are watching next from the S&P 500, but we just got to be careful going into January and February of 2024. So basically going into next year, because I'm not super confident that this rally is going to continue over the next, let's say, 4 to 8 weeks. I do expect maybe a 2 to 3, maybe a 4% pullback down to certain levels before we can reload, re-energize, get re-excited, and then of course rally back higher to potentially making our way up to all-time highs. So that's something to keep in mind. December seasonality is still there. Very strong move on the NASDAQ, right? So RSI MACD pushing right back up, coming up to that resistance at 14,400. So that right there is going to be that level to watch. On the NASDAQ, if you do end up getting a breakout above this, then the next target, of course, is going to be all the way up to 14,700. So this right here is going to be that next level to watch for the NASDAQ as well. Now, talking a little bit about Apple, and Apple here on the day pushing up over 74 basis points. So continuing on that breakout from that bull flag that we witnessed, and pretty much getting up to all-time highs almost at 197. So that is going to be that resistance level to watch, up over 74 basis points. And of course, support level is going to stay put at just a little bit under $190 per share. So very, very strong move to the upside. Resistance, like I said, it's going to stay put at 196, 197 for Apple. Talking about Amazon, and Amazon here, lots of consolidation sideways, and resistance is going to stay put at 147. So that's really the level that we are watching and paying attention to. Support level is going to be inside this green rectangle for Amazon. And of course, right now we're seeing a lot of negative divergence with the price itself moving sideways, and of course the RSI making lower highs and basically rolling over a little bit. And again, that resistance is going to be at around $147 with the support level at around 134. Just got to be careful from a risk reward standpoint. Amazon, I'm super bullish on for the long term. I believe it's going to be one of the highest growth stocks over the long term, but it's just a matter of resistance staying put at 147 with, of course, the RSI just trading sideways. Now, talking about NVIDIA, and NVIDIA here bouncing right back up very nicely. RSI MACD also looking incredibly strong. Lots of consolidation sideways in this range. Got a huge resistance and a supply wall sitting at roughly around 495 to 500. So got to break out of this resistance in order to break to new all-time highs. And support level is going to stay put right over here inside this green rectangle of support, roughly in the low 400s for NVIDIA. Advanced micro devices coming up to its resistance, and 131 was the high for the day, 52-week high at 132. So a little bit of a red candle. So lots of indecision and a bit of a doji candle here on the day, with the RSI also once again at an extremely, not really an extremely, but like still a bit of an overbought level at 68.70. And of course, MACD just consolidating sideways. So resistance is going to stay put at 130. Support level down to $112 per share, all the way down to low 100s for AMD as well. Talking a little bit about PayPal, and PayPal here on the day just consolidating sideways, so not really going anywhere, up over 79 basis points. Support level is going to stay put at $56, $57. So this right here is going to be that level with a resistance all the way up to $65 per share. So this right here, again, is the target, and the resistance and support level is going to stay put at $56, $57. Talking about Visa, and Visa here consolidating sideways as well, so not a lot of movement, with the RSI just hanging up there at an elevated level, and so is the MACD, and the price is basically trading sideways with a support at $250 down to $245 per share. Talking about Meta platforms, and Meta here also very nice rebound, up over 1.89%. So massive move to the upside after hitting down to its support at 315, 316. Again, this right here is the level that we have already talked about for Meta. And the next resistance and target is going to be $352 per share. So that is going to be that next level to watch as a resistance, and of course support level inside this green rectangle that we've been talking about. Talking about Netflix, and Netflix here bouncing right back up a little bit, just consolidating at that support right now. So that green line, that horizontal line is going to be that support level, of course, with the RSI coming down, MACD also rolling over below that signal line, and it's really just been consolidating sideways at the moment. So previous resistance and support level is going to stay put right over here at this level at 453. Talking about Google, and Google here just pushing higher a little bit. So it's obviously gapped up, but now on the day down a little bit over 1.3%. coming down from its resistance at close to around $139, $144 per share. Support level is going to stay put at roughly around 126, and we're seeing a lot of consolidation, a lot of gap fills, a lot of gaps to begin with. I mean, this right here, Google left a gap here, came back up to fill it. This right here, another gap fill, came back up to fill it. This right here, another gap, potentially will come back down to fill it. So there's been a lot of gaps for Google at the moment. It's just been, trading sideways and consolidating in that range. Talking about Microsoft, and Microsoft here, very nice rally back up, 88 basis points. 374 is where it's at. 366 is going to be that support level all the way down to $340, and resistance going to be all the way up to $384 per share for Microsoft. Then finally we come over to Costco, which obviously is continuing to hit new all-time highs at $613. Overbought RSI MACD, no doubt about that, and support level is going to stay put at roughly around low 600s for Costco, all the way down to as low as $531 per share. And finally, we got Enphase, which was slightly down about 3.88%, so back down to $103. Resistance is going to stay put at about $108 per share, and support level is going to be roughly around $91, $92 for Enphase. So this is where we are in this current market cycle and what I'm planning to do. By the way, make sure that you do connect with me on Instagram. My handle is going to be CastWRP. Link's going to be down below. Definitely do check out the courses down below, and also check out the Patreon and the Discord link if you want to get access to everything, all the benefits that the MoneyVest community has to offer. Trade alerts, trade ideas, exactly find out what I'm buying and selling, intrinsic value spreadsheets, everything's going to be included. But here's my message, overarching message, and that is, if you weren't in tech in 2023, you're probably not having a fantastic year. And if you have been part of this channel, chances are you're most likely in technology and growth stocks. So congratulations, you've probably had a very strong year. But going into next year, I do think that tech has become a very overcrowded trade, right? If you really think about Magnificent Seven, at the end of the day, they make up over a third of the overall market, right? So it's become a very crowded trade. And this happens, why? Because of a concept called style drift, right? And the reason why that happens is because everybody's looking for returns. Everybody's chasing for returns. Everybody's looking for alpha, right? And alpha is generated when you basically go after stocks and invest in opportunities that can generate extra return over the market, above and beyond the market. And technology has given us that. But now the question becomes, is 2024 going to be something similar or something completely different? Because last year, I can tell you, energy was a clear winner, right? Energy performed the best because the earnings were very strong. Crude oil prices were very high. Inflation was elevated. And as a result, energy stocks were up an insane amount. And their earnings were up like 300, 400, 500% year over year. And how has energy performed this year? Really poorly, right? And if you remember, going into this year, in 2023, so December of 2022, I specifically mentioned that energy is not going to have a great year. Why? Because of these year-over-year comps. Because of the very simple reason that their earnings were going to comp over such insane growth numbers that they're not going to be able to perform. And that's exactly what Wall Street and hedge funds look for. They look for the highest earnings growth, which is exactly why Meta's performed well, which is exactly why Nvidia is one of the biggest winners, exactly why Tesla is doing really well on a year-to-date basis. So a lot of these companies that have seen significant growth on a year-over-year basis in terms of earnings have done really well. So our job is to really look at, okay, 2024, tech's become too crowded of a trade. What is going to be an opportunity? I think small caps have potential. Small caps have been struggled and they have not really done well. I think biotech is another sector for us to look into. Those are the two that come off the top of my mind. And then solar, renewable energy space, but that really largely depends on how interest rates are doing. If they come down, there's possibility for huge demand spike, huge potential for earnings growth. But those are the three that I'm now looking into going into 2024 to really find opportunities in that sectors. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. We'd love to have you on board. And as always, happy investing. I'll see you all in the next video.